Alright, boys. Yeah, sorry for being a little bit late today. Had a bit of a meeting, sorry, a bit of a dinner actually with the big bosses from Europe. We're in town, just discussing things. But definitely an important day in terms of market positioning and price action. We saw over the weekend the news that the reopening of the Clintons' emails had led to no significant change to their outlook for her criminality. So basically, clearing her, like they had done in the past. Now this led to immediate risk on, because a lot of the reason that the polls attributed to the tightening of the polls in the last week was on the fact of the reopening of the FBI case into Clinton. So obviously removing that as a factor, they expect the polls to widen again come election day. Now I'm not sure how quickly people will unfold their opinion of Clinton, and in some regards maybe they'll be like, well, there's too much smoke there not to be fire. Still lingering doubts, that's for sure, but definitely it's a boost. And also with the polls, 3 or 4 polls coming out over the weekend all showing Clinton winning, the market was in relief rally mode. Now obviously with such an event risk coming up, we haven't recovered all the losses, so you can use, say, DAX as a little bit of a guide. On last week we saw heavy selling about 500 points, and we bounced up around 200 points here. But given that the risk is still firmly around the corner and people are going to be cautious, won't get the full resumption of the rally back up to that 10.7, or with the DAX, or with the US stocks back up to 18.5 until after Clinton wins. Alright, but you've seen the immediate reaction with dollar yen. Dollar yen had been holding its ground, bounced off that 102.60 beautifully. We had bought more dollar yen in the account, and so the whole idea was to get dollar yen exposure for Clinton's winning, similar to the short dollar Mexican trade. But those dollar Mexican trades, just because the market's so much more volatile in those pairs, was stopped out at 19.20. So a couple of you asked me about that. That was stopped out on that rally there to 19.20. So look, I could have held them and really gone to war, but I really was waiting for Monday to sell again, and there was just no option. There's just no ability. The market just gapped lower, right? There was nothing you could do in that regard. So yeah, unfortunate, but that happens in trading. Still got a fair bit of dollar yen, so I'm happy about that. Euro Swiss also should do well, should Clinton win. Alright, and at the end of the day, I don't want to have too much exposure going into this announcement, so I'm not really that upset about it. I just do want to have some exposure there to Clinton winning, because I do think it's more likely than not. And let's put some stops in just in case. You know where to put your stops now if you're wrong. You get stopped out, but nothing crazy. Say 1 at 240. And Euro Swiss, I might just hold Euro Swiss because it's got protection from the SMB, but those are the 2 ways I want to be playing. I could sell some dollar Mexican as well, but how are you going to sell down here? You're going to sell 0.25 rather than a full lot, just to have that same sort of risk management in place. And it's still a chance that Trump can win, right? Or there can be headlines in the next 2 days. So it's not over yet. The volatility's just begun. This week will be a doozy for volatility. I think it's going to be risk on. I'm just preparing for Clinton's winning. As soon as Clinton wins, as long as Trump does an acceptance speech, there's going to be no issues, and the market will focus back on the Fed within a week. Next week we'll be just talking about the Fed raising rates in December, leading to that nice dollar yen rally, leading to that nice dollar outperformance. Yeah, CPN, I just explained what happened to the dollar Mexican trades. So one was in profit, one was in loss. Stopped out there. Okay. So the one from all the way back there pre debate was stopped, and this one here stopped. I mean, net about even on those trades, so not great. I got a bit greedy, but I take some profit, remember, back in the day on these trades, so it was okay. Had a couple more that I took profit on early. So not the best, but not the worst. You can see dollar index loves the Clinton winning, and I think dollar index will resume its uptrend as well, given a positive outcome. But it is significant. You know, we were wrong about Brexit. We can be wrong about Trump. And the thing about this is that you're not going to get the result if Trump is going to win on the first day. Very unlikely. What you get is, you know, recounts and tight elections that may drag on for a few days, right? So it could be a bit of drama there. So this is one scenario where you can look to, you know, say it's Clinton edging ahead, but Trump theoretically can still win. You may have time to get on some of these pro-Clinton winning trades, and so it could not just be a quick flashbang. It could definitely be a prolonged affair, and also Trump winning, you know, by, say, I don't know, Supreme Court decision. You know what I mean? Like the same sort of thing as Bush versus Gore. You might see it really lasts a long time before there's a new president announced. So yeah, by no means is this have to be over Wednesday Asian session. It's just pretty likely, if it comes out that, you know, Clinton just smashes. Now, the most positive outcome is if Clinton wins and wins both. The Democrats win both the Senate and the House. That scenario is ultra positive. Ultra positive. Okay, that's the most positive, I do believe. But we'll check some of the bank reports on that a little bit later. Is it still worth getting into dollar yen? Yeah, I mean, if you think this is the case, that Clinton's going to win, then we're going to probably 107. Alright, I mean, it's just, without the US elections, it's all about the Fed, and the dollar yen's the most closely related to the Fed expectation, is the Fed trade. So I don't have no problem getting long dollar yen, even at these levels. Just your entry is a bit wrong, so maybe half lot rather than full lot. You're chasing a little. And you might get a much better level if there's any headline risk coming out. You might get a 103.80. In fact, I'll buy some 103.80. I mean, Clinton's going to do more of the same, right? It's just, you know the enemy there. You know the devil. Trump, you don't know what he's going to do. If he goes trade warring with everyone, I mean, that's what the fear is. Calling China a manipulator, currency manipulator. If he calls China a manipulator, it sort of forces the US Treasury to put sanctions on them. Changes the game. It's not something that has to be done via, well, this is what I read anyway, it's not something that has to be done via the Congress. Right, but then again, I'm not a constitutional lawyer for the US. But whatever the case, I mean, hostilities could just ramp up everywhere. You know, any of America's enemies if he takes a brash, bold approach to it. So how did this affect most pairs there? Let's run quickly through. So obviously US dollar strength. The pairs which are most clean is the dollar yen, but euro is also pretty clean. Also, the pound took a little bit of a beating. Now, the pound was doing a nice recovery trade, but this sort of put an end to that, and we saw a recovery, a pullback down here. This is even after the UK had that, you know, very positive vote there from the UK High Court, last week. We'll look into that when we have time, but just right now we'll focus on US elections. This could easily be done. The relief rally could be done. We didn't get to 125.90 we were talking about last week, but we did get to 125.50, so easily this could be over. Be very careful here if you are on the buy side hoping for another extension. You're just not lucky in terms of timing. Aussie dollar, we like to trade it. 77 still capping, even with all the risk on in the market. Now, it is, one of the most asked questions I have from my clients is Aussie going high if Clinton wins? I mean, stocks are going high, so usually Aussie would, but at the same time, US dollar is going to be very strong. So I think it's a very tough battle and not a clear way to play it. There's no reason to play it. All right, I think it's more likely than not that we end up fairly mixed with the Aussie. Now, if Trump wins, okay, then although the US dollar is going to be weak, stocks are going to be tremendously weak. And if you take Brexit as an example of what's going to happen there, you're going to see sharp selling in the Aussie. Okay, so at some stage or some level of selling, US dollar is a safe haven. especially against a risk-sensitive currency like the Australian dollar, like the Canadian dollar, like the New Zealand dollar. So at some level of risk off, the Aussie will get sold, no matter how negative the US dollar story is. You've seen that many times in the past. Ultra negative non-farm payrolls ends up being negative for the Australian dollar because stocks fall too much, and risk off selling comes through on the Aussie. Aussie yen, Euro Aussie buying. You know what I mean? Like this is how the Aussie. So I think Trump is negative initially if stocks are ultra negative. If and I think that's the only result, right? If Trump wins, whereas Clinton winning, stocks positive may not be enough to counter the US dollar strength, but Aussie yen will do really well. Yeah, Euro Aussie selling will do really well. Aussie will be strong, just maybe not as strong as US dollar. Hope that clears that up. Basically, don't trade the Aussie for the US election. Alright, quickly here, we're going to just check some of the ideas in the room. We haven't checked this for a while. We just want to see how people are playing this. Let us know if there's any dangerous trades going on. Dollar yen long. I mean, this is the exact dangerous trade that we're talking about. If the relief rally over, if the short squeeze is over, then we've got ourselves an issue here. Okay, so you guys on this trade here, be careful. I mean, if we are extending higher, these are nice levels, but is US dollar not going to be strong if Clinton wins? I think it is. Is the pound under dubious uncertainty? Yeah. Let's have a little looky here. Aussie Kiwi, what are we doing? Long. I like it. I like it, NFX. I like it. Posted this 50 seconds ago, probably just to get the review. I like this for, this is a sneaky little trade, and this is to do with RBNZ likely cutting rates. I think that's what half of this is about. RBNZ is meeting later this week, Thursday, right? So people are not even paying attention to it. But they're likely to cut rates. Now, this is even though we have a scenario where the chances of RBNZ of cutting have drifted down from 80. This is in the background of all the US election noise, from 80% down to one sec, boys. From 80% all the way down to say 60, 55%. And even this morning we got some news, the CPI has been revised higher. That doesn't mean they're not going to cut. I mean, they've given the word, and the Kiwi's been rallying as the chances have been dropping. Now the Kiwi has this sort of this effect with the RBNZ that the higher it gets, and has sharply rallied in the last few days. The higher it gets, the more likely RBNZ will cut. The RBNZ know if they don't cut, then they've got themselves a Kiwi dollar rally on their hands again. And it took so much effort for them to control this Kiwi rally. And if they close the door on cuts, then really the market's going to punish them, I believe. So 275 if they don't cut. So with the expectations of the market so firmly on them cutting, I think they've got no choice to reluctantly cut. And if they're smart, they'll leave the door open for that second cut, which is probably unnecessary, but mostly to do with keeping their currency weaker. What they have is an inflation problem. They're trying to import inflation by keeping their currency low, making a lot of their imports more expensive. Okay, so that's the main theory behind it. Now with inflation, they have, with the Kiwi being lower, they've got a chance to rebalance the economy, yada yada yada. This is all good in theory, but on the other side of the coin is they've got strong employment and strong growth and super hot housing, almost bubble level housing like Australia. So that's the argument, I think, against them not cutting, stoking that inflation, stoking that real estate. All right, but while they've got inflation really so weak, they can get away with it at the moment anyway. But countries like Australia with their housing bubbles and New Zealand with their housing bubbles, the ultra low interest rates that we have right now, I mean, may come back to bite us when we do eventually get inflation and they have to raise rates. And this is end up with Australia back at 7% like we had, 4 or 5 years ago. And the Kiwi back, above 5%. Relatively high currencies against most pairs, against most other industrial countries. Therefore, the carry trade will come back. So if they keep, if they keep cutting rates when they don't need to, then you may see this come back to bite us in a few years. And once again, Aussie, being above parity even, or Kiwi being above 80, back towards that 90, 88 level, that all-time highs. So, yeah, I can understand the argument why they'll stand pat, but I think they promised too much for them not to deliver. But then again, we're talking about the RBNZ, boys. If you've been watching the stream for the last 5 months, you know the RBNZ has failed so many times. Like the time they cut and then said, yeah, we knew the Kiwi was going to go higher anyway. We just, we knew it. What? You cut to keep the Kiwi lower, and then when it rallied after you cut, you said, yeah, we knew that was going to happen? I mean, what is this? What is this, Wheeler? We don't trust you. Their Prime Minister's an ex-currency trader, but the central bank governor is not. Alright, so Aussie Kiwi's okay. Dollar CAD. You're Aussie short. I like this trade. This is to do with risk appetite. And strong risk should allow the the Euro Aussie to resume its downtrend. Although you can't see it in that chart, Euro Aussie's been in a multi-month sort of downtrend now, and we broke that 144 level, and this is only because of Trump, chances of winning. Otherwise, we would be a lot lower here. CPI has been very strong. RBA has been very neutral. ECB is still going to keep their ultra-loose monetary policy. So Euro Aussie short makes a lot of sense. Post-Clinton. Alright. I mean, that might be enough for the trade ideas now. Let's have a little review of what's going on in some of the banks' take on some of this. Alright, this is ING, a cheat sheet for election day. Something for you to sort of keep in the back of your mind. What happens not just in election, but post-election, so in the first 24 hours as well. So, ultra positive is a clean sweep by Clinton. Clinton just straight winning, but not winning the House. So just some sort of control. Is medium level rally. Trump saying it's rigged and not delivering a concession speech. Tempered rally. If the GOP goes straight into impeachment talk of Clinton, then yeah, rally cut short. This is a bit bigger chance than I think people expect. I mean, this is silly season in politics, right? Alright. Trump wins. It's just heavy euro buying. Heavy dollar yen selling. I mean, this could be... I mean, this is crazy. 90 on the dollar yen means 10% plus crash. So if he comes out just swinging, right, in the first few days, just going, Mexican this, China that, you're going to see some pretty heavy selling. Because just too much uncertainty. Too much uncertainty. I think we focus on Trump winning if it's a chance. And we'll have a bit of time to review it. So 00 GMT, right? That's 11 o'clock Sydney time. It's 11 a.m. So these guys reckon if Clinton wins Florida, basically it's game over from what I've heard. If Clinton wins Florida. So this is Sydney time, 12:30. Alright, so midday to 12:30 to 1 o'clock. That's when it's going to be. And literally, it could be all over by 3 o'clock on Wednesday. So keep an eye on Florida, Pennsylvania. Interesting. Alright, we're just quickly going to check the Credit Suisse FX Daily. Now this is the technicals that we look at every few days. Just to keep an eye on the dailies. We don't want to... you miss things sometimes if you don't check the dailies every day. So the Euro back up at its trendline break. Almost trying to get back into its wedge that we're in for like 3 or 4 months, waiting for it to break out. I think this is going to hold if Clinton wins. Going to be targeting initially the 108.50. And that could easily be broken and lower levels tested as we come into December. Now post December depends if it's obviously if the Fed is dovish raise, a dovish hike as they're going to be talking about it, or the slow Fed as others are putting it. Then you're going to see it's going to be hard for the US dollar to continue to rally. It'll be so widely telegraphed that there'll be a lot of sell the rumor, buy the fact. But initially, we can do 3 or 4 weeks of just buying the US dollar into that December announcement. Dollar yen. I talked last week about targeting the 200-day moving average. It's falling steadily. It's at 106.80 now. Still a pretty good target here. Pound is tricky. As we get back to that lower level, that 123, 122.50, it's going to be hard to sell there. All right, but here it does seem like it's naturally going to fall down if the US dollar is strong post Fed. Dollar Swiss has got a fair bit of potential, and it's a lot less volatile. Okay, so you can sort of buy Dollar Swiss with a little bit of immunity. You may not get the full run that you like. You may not get the full pips as you would get in a dollar yen, but it's a little bit more reliable, and if you're wrong, you won't get too much selling. Aussie dollar, not much to see here yet. Kiwi, downside likely after as it's likely they're going to cut. Depends on how they cut, right? And if they don't cut, then expect a huge rally to 75. Euro yen's likely to go higher. Okay, Euro yen is likely to go higher if Clinton wins. It will be a struggle, but it will be definitely noticeable. All right, so that's the trades there. Tomorrow we're going to have a bit of a clearer view, but we're going to be still focusing tomorrow on the US elections, of course. Brexit, we will talk about that when we can, just not now. Alright boys, tomorrow's going to be at the same time as the normal time, so back at 9 GMT. If you have any questions about that, any questions on certain pairs that you want me to look at for the US election, or some sort of crosses which are not involved in the US election, like Aussie Kiwi Long, We can have a look at some of those. If you do want to access and have a chat with me, you are going to need an account at Easy Markets to talk during the actual Wednesday session. I'm going to be quite busy, probably won't be able to talk to you on chat during that day. Okay, so if you do want to have chats more regularly, then do check us out. Sorting some things out with Nick, trying to get some special conditions for you guys. Other than that, we will be back tomorrow at 9 GMT. Trade safe.